Hello and good evening. Welcome everybody on this great webcast 1 year after the acquisition of Raccoon Band. My name is Claudia Eifert and we have here on the call tonight for you the CEO of Utopian Global, Bill Rao, and the CEO of Ryan Messer, the CEO of STORH, Brian Messer. So I have them both on the call today so that we can go through this first exciting, interesting year with COVID, I must say. But yes, we're going to have some good updates for you. And we certainly have some great questions which we already sent in and prior to us, which we're going to address and discuss. So with that, I'm going to give over to you, Bill, and of course to Ryan.
Well, thank you so much, Claudia. Thank you for everyone joining us on many parts of the world for this important call. Great to see you there, Ryan.
Good to see you.
You were here in Dubai with us recently. You've gone back to the States. Well, it is an important call. It's certainly been a challenging year, 2020. But fortunately, we own a great asset managed by a great team. And I often say business is people. It's not just companies. I've known Ryan Messer since 2004. I've invested with him in the group for many years, and it's been fantastic. And what we have here at Raccoon Bend is absolutely no different. But we can't fool everyone. I mean, 2020 has been a challenging year, but it's been a great year. And I know that you're going to take us through and show that this asset is produced every month, regardless of what oil price went negative. I think was it March or April? But because of your great management and hedging position, we still had a profitable month, which is fantastic, Ryan. So, no further ado, I want to pass it over to my good friend and businessman, Ryan Messer. So great to have you in the call, Ryan.
Bill, always a pleasure. Thanks for having me on. It's always great to get in front of the people and sort of share an update. I know it's been a little quiet. I think it's been a little quiet around the world, hasn't it? With everything going on, and it really has slowed business down for us in our multiple, business sectors. But I think we're kind of seeing everyone coming out of it. I think August and September are going to be better months, and I think towards the end of the year, hopefully we have some resolution with this COVID virus, or at least some sort of vaccine hit the market, and I think that will ease things up, and we'll start seeing more planes in the air and more consumption around the world, and that'll only be a good thing for us. But kind of looking back, I mean, it has been 12 months since we acquired Raccoon Bend, and as you point out, we've been cash flow positive every month, and I'll kind of touch on some of the things that even we were able to do that even surprised me. In what has been, I've been in the business, give or take 20 years. I've never seen a negative negative price of oil. And obviously for the month, it wasn't negative for the month, but we only hit $16 a barrel, or a little over $16 is what we received. Of course, I'll talk about the hedging alongside of that, but we still made money at $16 a barrel. So that in itself should be applauded for the operator. They did a fantastic job. Those of you who got the privilege to meet Pete or Glenn out in the field, top guys, what they were able to do with the field is miraculous. And it just goes to show you how nimble you can be when you have to be from a business perspective. So there's a few things I'll walk through today. Obviously, we wanted, for some of those folks on the call that are not familiar with STORH and maybe even not even familiar with Utopian Global or what we've been doing over the last 12 months. Obviously, the last 6 have been quite stifled with what's going on, but prior to that, we were making some, pretty aggressive moves towards acquiring more assets on top of Raccoon Bend. But today, specifically, we're going to talk about Raccoon Bend because a lot of people want to know kind of where we're at 12 months from where we started this and what our initial game plan was with respect to distributions, returns, what's going on. So we're going to give everybody an update today on that. So what is Raccoon Bend? Just in the short of it, Raccoon Bend's a producing oil field. It's been around since the 1930s. It'll be around for another 25 to 30 years if we manage it properly, which we're doing. but it makes around 700, 750 barrels a day of crude. It produces out of about 85 wells. We've got over 90 active wells. It's almost 6,000 acres. For those of you who know oil and gas and know energy, this is a very sophisticated project in the sense that we've got 3D seismic over the entire field. I mean, we just recently reprocessed that data. So it basically just use sound waves and seismic technology to essentially image what's below the surface of the earth, right? So it gives us all the different formations, allows us to see the faults and the various reservoirs that lie beneath. And we've been able to uncover some things that I think over the next couple of years are going to have significant upside for the company. I don't want to go over that today. That's for another call. But we got involved in this project. I've been tracking this project for about 7 or 8 years. I wanted to buy it when we had our public company. I couldn't get the chance, but as it turns out, last year those sellers actually decided to sell, and we were able to pick up some, fortunately enough. This project, year over year, for at least the last 12 to 13 years, has increased production year over year. And typically in a productive field like this, there's not a whole lot of upside. You have the producing asset, which over time declines. Now, at some point, this field will go on a decline because we'll have drilled and developed everything within its 5,600 acres, but those days haven't come yet. We've still got lots to do. We'll probably drill 3 or 4 wells a year. We have lots of recompletions, workovers to do in the field to keep the production level up and stable, if not on the increase. And of course, that's also dependent on the price of oil. So that's the reason why we love this field, because year over year, we've been able to increase reserves, if not keep them stable. And that's huge with respect to these types of assets. So what has occurred over the last 12 months, just from a return on investment perspective? Obviously, we have not been sending out distributions, and we're going to explain that now. When we acquired Raccoon Bend, we wanted to acquire more interest in the field. And to do that, we only had so much capital to spend, and we didn't have enough capital to close, so we borrowed some from a lender in the United States, basically a capital provider. And so they partnered up with us on this deal and provided us millions of dollars of capital so that we could close on the interest that we wanted to buy for Raccoon Bend and for STORH. And as a result of that, obviously all the cash flows have gone towards paying towards that, as well as the amortization. What is the amortization? Amortization is essentially taking the debt and paying it down over time. So it's what that schedule looks like. So we've been paying it down at a rate of almost 2% every single month, month over month. So that's over, it's nearly 20 something percent per annum that we've been paying down over the last 12 months, on top of all the field development. So we've been putting money in, obviously, towards the drilling. We drilled some wells last year, as you may remember, and we've done a lot of workovers in the field. And of course, that takes capital too. So on top of the amortization, which is us putting 1.75% every single month back into paying down that debt, and we'll explain to you why that is so important to be able to leverage our capital provider for your benefit here in a second. But it essentially, so that's what's happened over the last 12 months, right? We've been paying down the note, and we've been keeping and maintaining the field. So why is that important to you? And I think I have those slides, don't I, Bill? With the 2 graphs. I kind of wanted to go over that now, if that's okay.
Sure, you have some slides there, I believe. If not, I can share
I
mine.
do. Just bear with me.
Correct? I need to bring your presenter now.
You make your own presenter, Claudia.
Yeah, let me know when you've done that.
Okay, so I just gave you keyboard and mouse.
Okay, you need to change presenters because I have the slides on my PC.
All right, so yep, you are.
Okay, show my screen. Okay, can you see my screen?
You can. You just have to make the PowerPoint enlarge it. So click it so it goes
Yep.
larger on.
Okay, just 1 second. Bear with me. Technical difficulties. Okay, how was that?
It could still be larger, I think. Yeah, you got it. That's still not open complete. It's still not open completely. You got to click on the right bottom,
It is on my screen. How is it now?
No, we're not seeing it fully open here. We're seeing the 4 slides on the left plus the main slide showing. So you don't have it on presenting view.
Yeah, I just shrunk it. So how about that? I like the little thing to the left. How was that?
That's good. We can read it.
Okay, good. So well, stepping back, and we'll talk about the banknote in a second. So here's the production. Here's essentially every month. This is going from January 2019 through to April of 20. We've obviously got May and June. May was a very low month. I think we sold 8,000 barrels for the month because of the price of oil. So what we did in the field is we held back production. We stored it on site because we knew we were only going to get roughly $16 a barrel in the field. So we knew that if we held it over until June, we would receive a much higher price, which is what we did. But obviously, as I explained earlier, and you can see right here, I don't know, bear with me, let me, oh boy. Okay, 1 second. Oh man. Okay, anyway, you see down here in April of 20, we received $16.99. That it does not include our hedges. We were hedged at around $50 through British Petroleum. That ended July 31st. So now we're exposed to market values, which is give or take $40, $42 a barrel right now. So much higher than what it was. But so relatively speaking, production has been pretty stable in the field, and that's been great from a cash flow perspective. We'll show that here in a minute, but it doesn't really concern us in the long term, because if you look at historical oil prices, you'll see that there aren't many times in recent history where the price of oil has been low as compared to where it is right now. So I think we've only got good times ahead. Unfortunately, this economic slowdown and the lack of travel it will probably hurt us in the short term, but I think long term it will come back because it's obviously going to affect production coming out of the U.S. So obviously, as the price of oil goes down, less and less companies drill because it's less economic to do so. So here are some historical oil prices just to give you a sense of where we've been. Back to the note. So when we started out in 2019, the blue section here is the equity that we all put in as token holders. The pie represents the asset that we acquired, Raccoon Bend. And the orange represents the promissory note. So this is the loan. This is how much money we borrowed. You can see from 2019 to 2020 how much more equity we all own as a result of the cash flow not being distributed, but paying down the note. So at a much better rate. So obviously the asset performs at a much greater rate than the percentage of what the loan cost us. So therefore we are leveraging the capital that these guys provided to us and our ability to set it up. So just kind of talking about that, and maybe Bill, maybe you've got some questions or kind of want to jump in, but essentially where we're at, we still have the note, and until we can completely extinguish the note, there's no point. We cannot send out distributions. And so that's kind of where we are as a company. That's to everyone's benefit, because over time, as we pay off the note, those are less shareholders that we've issued equity to, therefore having, you having to give up, a piece of that pie. So at the end of this, once the debt is completely paid, we're all going to own more of the asset than we would have in 2019 had we just decided to take some distributions. So if we were to take distributions and we didn't have this bank note in 2019, our distributions would have been X, and by the time this note is paid off, our distributions are going to be X, probably times 2 or times 3. And that's the advantage of being able to leverage the bank in this particular scenario. So this is just a good corporate structure to follow, and you can even see that we've been able to weather some pretty bad storm, which was $16.99 a barrel for the price of oil. So and that's obviously, as Bill pointed out, sort of due to our hedging strategy, and also due to our good stewardship from the operator in the field. So when we were, and I kind of wanted to talk about that real quick. So when we were drilling and developing last year, back when the price of oil was high 50s, low 60s, our lifting costs, so the cost to produce a barrel of oil, was somewhere in the mid 20s. So about $25 to $26 a barrel, because obviously we have to staff up and there are some expenses there. We're doing a lot more in the field. That costs money, but we were able to cut our expenses significantly. In fact, we were able to cut them by about 50%. So our lifting costs went from somewhere in the mid 20s down to about $12 a barrel. So the difference between $12 a barrel and $17 or $16.99 was our profit for that month. We received more because we obviously had the hedging from BP, so that generated some additional revenue for us, which is how we're able to maintain our bank note there. So those are the things I wanted to cover. Bill, I know you've got some questions and some things that you probably want to point out, so I'll sort of open it back up.
Yeah, hi Ryan.
Hey.
Yes, I will cover a few points. Thanks for the summary there. Let's stay on the on the banknote. I remember when we first bought this particular asset, it was 12%, of course, and we had the option, of course, of let's leave the slide up if you don't mind, so we can still see that.
I changed presenters.
Oh, okay. It's fine. So I want to make it very, very clear what this means. Primarily, dilution as an investor, and I'm one of the major investors in STORH, as you are, Ryan, and certainly Claudia and some of the people on this call are major investors. We had a choice, of course, over a year ago. Either we just buy the 4%, or we take out a bank loan, which STORH did, of course, and buy 12% of the particular asset with the idea of paying down that note and increasing everyone's equity. Now, as an investor myself, if I know that I can put an amount of money into a particular investment and increase that investment over time through the production of that particular investment to multiply my returns long term, it's a no-brainer for me, and that's what the board decided upon. However, there was a few changes that were unexpected that happened in this year. Now, in November last year, the board of STORH had a meeting, as you recall, Ryan, that you chaired it, of course, and we said that at the 31st of July, distributions would commence to flow back to the distributors, because to the members, to the investors, because primarily up until that particular time, all the revenues taken from there, as you explained, had been used for drillings, had been used for recompletions, repairs, wellheads, and also for paying down the banknote, which essentially has increased our ownership. It's increased everybody's ownership in that respect. But what happened, of course, when it came to the financing at the end of July, the bank didn't play ball like we expect them to. But why? And why didn't they do so? Because primarily, we're living in a different environment right now. We have COVID-19. Economies have contracted. Oil prices had crashed to negative prices in April, of course. So when the bank came to refinance it, they didn't give us the generous note that we were anticipating. So we're actually paying more than what we were paying before to pay down this particular note. Now, that's the bad side. The good side to it is that STORH makes money month after month, and every month, each and every one of us is increasing their ownership. And this asset's going to continue for the next 25 years producing. So for me, on the short term, to have the ability, I'm talking about myself now, other investors will have other views, of course, but I know the major investors that we've spoken to like the idea that on the short term they're going to increase their ownership for a much longer yield payout over many years to the future. But of course, the cost of that is, of course, there's no distributions paid right now because it's all going to increasing the ownership of the particular asset, which is a fantastic thing. Now we'll probably have some questions to address on that. I want to touch on the lifting costs. When we say the lifting costs, the cost that it actually takes to extract the condensates out of the ground is quite remarkable, Ryan. I read a lot of news on this and follow it. In many parts of the world, well, you're in the US, and the average lifting cost in the US is probably above $30. Would that be right?
Yeah, in most places it is pretty expensive to lift crude. And that's why, I don't think we'll ever see extremely low oil prices in the US, or at least for a really long time, because it costs a lot to extract and it costs a lot to lift and to operate.
And the reason I want to speak about this is I want everyone to understand this is one of the reasons why we bought STORH, and one of the reasons why I put a lot of money into this as well, is because of, one, the type of asset it is, and two, the management team of it. Now, Ryan's already touched on Peter and Glenn, the engineer and the geologist that have been running this. They're not just operators. These guys have skin in the game. These guys are owners of this particular asset. It's their bread and butter. So they're managing it's like their own little baby in one sense. So they manage it very, very well, very well. And they've been involved, I think, since 2001, maybe 2002. They've managed to increase the reserves from, I think, 1.8 million barrels in 2002 or something, Ryan, up to about, and they've since pumped 4.3 or 4.8 million barrels since then. So there's been a significant increase from this management team. Now, you touched on the seismic study. It sounds very nice, and we discussed it at a board meeting in Dubai. But in general, what does this actually mean to me as an investor and to the people on this call as an investor with STORH? What's this seismic tell us?
Well, so you pointed out the reserves a second ago. So let's go back to that. So I believe it was 2012. This field only had on the books. Now so reserves are what you can establish or based on some sort of certainty exist on the lease, right? So you have different classifications, right? And the most important one, or the lowest risk one, are proved reserves. And so we're only talking about proved reserves here, not probable or possible or contingent or any of these other categories of resources. So in 2012, the field had 1.7 million barrels of proved reserves left. So what does that mean? At that point in time, the engineers would only give the field a productive life of 1.7 million barrels. So that was all that was left that was going to be extracted out of Raccoon Bend. Since 2012, over 4 million barrels has come out of the field. And now remember, only 1.7 was ever going to come out of the field, but only in the last 8 or 9 years, we've produced over 4 million barrels and now still have over 4 million barrels of proved, probable, and possible. And how have we been able to do that? That's truly just a testament to the group that is working the data. So what is the data? The data is that seismic data. It's going in and determining where these fault blocks are, where the reservoirs are, what other zones can be completed, what zones produce, what new zones can we test. And, because some of these wells that we drill out there, like the one we drilled last year, had 7 or 8 different formations that were all productive. You can only produce one at a time. So once that one depletes, then you go down a little bit deeper and you make a recompletion and you produce that zone. And then once that depletes, years later, you go in and make a recompletion. So we have a tremendous amount of reserves behind pipe. That's the reason why this field's going to be around for so long. But when we just recently reprocessed the seismic data, think of it like an image, because it is. But think of, 1980s technology to 2020 technology. The resolution on that data is so much better and crisper and cleaner. You can do so much more with it. And because of that, we're seeing reservoirs that we didn't see before. So these are things that are probably in the probable or possible category right now. You can't put them in proved until they actually produce on the lease, or you've got an offset to it. But these are things that we're going to be testing over the coming years, which could therefore, again, continue to add additional reserves and future cash flow for all of us. So sorry for the long-winded explanation, but that's essentially what that means for us, is that 4 million barrels that we have in proved, probable, and possible may end up being 8 million barrels by the end of this, because we're going to continue to uncover things as we continue to work the field and the data and put our hard work into it. So that's the beauty of this field. And you just don't find these types of fields very often, which is why we jumped on it.
Yeah, thanks, Ryan. The other question, of course, I had when we met in Dubai and the board was discussing, of course, of this. We're looking at the financing options that we actually had. In the end, we didn't really have many financing options because the financing environment in the world has dramatically changed in the last months of this year. But with that said, we're not fixed on that. I mean, when it comes to paying out distributions, when it comes to paying off this particular banknote, we have different options there. So we're looking at multiple options right now as the economic environment is actually improving around the world. We're looking at different financial institutions to refinance this particular asset at a much more generous or much more generous for the store owner's point of view. And secondly, maybe we even sell some equity in it to remove some of this debt, which means we're going to dilute the asset. That's okay. It just means we pay off the loan quicker. Of course, we might sell some more of this particular asset. We've got to be cautious there as well, because valuations right now are not the same as they were a year ago. Correct, Ryan? Given what happened to the oil prices this particular year. So these are the things that the team is actually managing. Overall, we have a real asset. It's generating solid cash flows. Every month we're increasing our ownership in that particular asset. And the objective is, of course, is to pay out distributions. I want distributions. All of you want to have distributions as well. But we have to do it in the right sense. Now, we had large discussions in Dubai over this, and I know you from running the, I was involved with you when you were running the actual public company at that particular time when I was involved in a previous investment with you. We had the same sort of scenario, Ryan, and primarily the board decided on, no, we're not paying out any distributions on the short time. We're going to actually reinvest into the particular asset, because in the end, we all benefit from that. And the economic environment that we have now is really forces in that particular position. Now, for the big investors, for the larger investors, obviously they got probably, in one sense, more to probably lose by waiting longer. For the small investors on the smaller packages and things like that, believe you me, I think it's a great choice that you're actually increasing your asset ownership month after month. You're getting free store, because let's just make the assumption that this particular asset's producing, let's say it's producing between 700 and 800 barrels per month every month. That's what it's producing. That's our volume. The only other variable, of course, we have is the pricing, and the other variable, of course, is the number of people, the shareholders that we're dividing that up into. Now, at the moment, of course, we're increasing our ownership in that particular asset because we're paying down the debt every month. I think it's just under 2%, and it's significant and it's compounding. Okay, now you don't see it in your pocket right now, but you're seeing it in real asset ownership being land banked in the reserves in the ground. That's what you're really getting ownership now. Now, when we are in a position to actually pull the trigger on this and start paying up distributions, you're definitely going to be in a much better position. So I know there's people on this call who are disappointed by this, but if you look at the numbers and you analyze the situation that we're in, the STORH board has made the right decision in what they're doing right now. And to be quite honest, the bank never gave us any choice anyway. It had to go this particular way, Ryan.
Yeah, it did. And so that kind of puts us into plan B mode, right? So what we wanted to be able to do is refinance the debt at a really low interest rate for a much longer period of time. So we would have some free cash to do some distributions. And even that scenario is not the most desirable because it's not the best, it's not the best use of capital, right? So the best thing to do is to pay the note off from a cost of capital perspective. Now, plan B, we're looking into now where we've got several things that we're working in terms of finding some owners for some of the interest, and then we're actually uncovering some different ways to refinance pieces of the debt. So sort of breaking it up and refinancing it that way, as well as maybe us putting some more capital into it to speed up the process to get faster to the point that we can send out distributions, because we feel it just like you do. And so think about it from our perspective as well. And because we feel what everyone's going through around the world, we understand that cash flow is important. You made an investment, you want to see a return. No one understands that more than we do. And from a marketing perspective, if we're trying to grow STORH, we're trying to build it, we're trying to get positive news out in the market. The last thing we want to do is tarnish that by not being able to live up to what we said or intended we wanted to do. So it only behooves us to, as quickly as possible, get to a point where we can make distributions to let everyone know and give people the comfort that what we have is real, if you don't already believe it, because it is. So I think in time you'll see that the decisions that we've made and the things that we're doing now will benefit everyone in the long term. And because we look at everything that's out in the market today, and I think owning real assets is the way to go. And that's what we'll continue to push, because that's what we believe in, and that's what we've been doing. That's what I've been doing my entire career, and Bill as well. So I hope that makes sense.
It certainly does make sense, Ryan. And I'll just make the last point clear. We're not locked. We don't want to stay locked in the current situation. Our intention is to get this refinance, or maybe sell some equity to another shareholder to be able to release that. But on the other side of that, as I've explained already, it's a solid position for us because everyone's increasing their holding at the moment as we pay down this particular note, which is fantastic. So that is the situation on that. Now, if any of the team members on this particular call, and especially the larger investors, would like to have a one-on-one call with myself regarding this, discuss this, argue this or that, or whatever they want to do, it's not a problem. We're here. We don't run and hide. We've made a business decision as a board, a strong business decision. It's the best decision to manage this particular asset, especially during these hard times, and we stand behind our decision. So if anyone would like to have a direct call with us and to go over this, you're most welcome to arrange that through contacting support@utopianglobal.com, and we could certainly do that. But as Ryan said, we're very, very conscious of the situation, but the board has made a good, strong decision there. And just by when you see down how much has been paid down on the note already since the ownership in 12 months, it's pretty significant. So the money's been put to good work. The alternative is you get paid depending on how many shares you have, you might get paid your $50, you might get paid your $300, and you have that in the bank, or you spend it, your money's going backwards. By being able to build up real asset wealth and what we've got here over the long term, which is going to continue to pay for decades. If you look at the long-term vision, this is the right decision. This is my retirement funds. This is how I look at it in one sense. Not that I'm going to retire, but I'm seeing it like a retirement fund. It's a good, strong passive income. And right now, I want to build up my ownership in that. And that's the decision that we've made myself, because I know that Ryan just spoke about putting more equity in. I put more equity in. And in fact, I will say this, Ryan, you may scold me for saying this, but Ryan believes in this asset so much, him and his business partner, just to get this banking note across the line, put up his company. He put up his own company to support what we have. That's how hard financing is at the moment with projects around the world. So that's a testament to what he believes in in this particular asset. He's put his whole life's work and career and his family on the line to support this, so we could keep moving forward with this great asset. And he did it comfortably because he knows this asset like the back of his hand. And I just wanted to share that because I know some people out there will be saying this and saying that, when I want to tell you there's some people on this call who have the real risk when it comes to this, and they're doing it quite proudly because they know that we've got something great here and we're going to manage this exceptionally well, and we're all going to do very well over the given time this asset's going to produce. So I hope you don't mind me leaving that out of the bag, Ryan.
No, that's okay. It's, it's one of those things. If people ask, we would definitely share it. But you're right. We did pledge our company BlackRock, so Randall and I, and that's really our main source of income. So if things were to go bad, and our company is on the hook too. So I mean, we've got a tremendous amount of skin in the game, and we don't win unless we all win. So that's just how we built it.
Yep. So Claudia, is there any other questions? We've spoken about distributions will be determined upon when we refinance this, or we have another shareholder coming in. Besides that type of question, are there any other questions there? Would anyone like to ask us, or would people like to contact us through support@Utopian Global to arrange a specific one-on-one call? They're most welcome to do that as well. We have no problem doing that. I have no problem doing that. So anything else you'd like to say, Claudia?
Yeah, there is, of course, a lot of questions which we don't even have the time yet to answer. So we're going to arrange a special call there with the few people there, because it's just too many questions. One of the questions here I see from Bill Wilmot. He's asking, how does this impact on the current STORH price for new incoming members? Will remain same, increase as before, or on hold until debt is paid off?
Right now, we're gonna leave it static, so we're not gonna change the price of STORH. There's no point in trying to revalue it right now unless something significantly changes. And I think given where our cash flow has come, obviously we had a dip in the market, but from our perspective, we didn't really see it. So in terms of our value, because we were hedged, so we really haven't seen much fluctuation, so I don't really see a need to change the value. In fact, we just got an updated reserve report, and I mean the numbers are pretty darn good still. So I'm not concerned about the revaluing the company at the moment.
Great. Another just basically positive statement from Gary Shaw coming here. I'm not going to release, it's a lot of STORH, and he is agreeing on that, which is great. Then Bill is also asking here on, can you expand on the status of other plans, including midstream, minerals, etc. at the moment, or do you wish to do it for another webinar?
I think we do it on another webinar. Yeah. I mean, there are some things in the works. It's obviously been a little bit, it's been slowed down, but we do have other projects. We just need the market to come back around, and of course, we need a little bit of resolution here to get, the marketers excited.
And just on that particular point, Claudia, as Ryan said, Ryan was in Dubai. We spent a week together going over different projects, re-evaluating Polystream, etc. And to be quite honest, just as the banks have dried up and pulled back on funds, so have people. And why? Because no one expected COVID-19. All of a sudden, people had to preserve their savings. We don't know how long this pandemic is going to drag on. So the dynamics have changed dramatically with that. Now, with that said, our game plan does not change. It just means the time frame to achieving it has changed dramatically based on those changes that are happening in the world right now. But there's plenty of fantastic projects out there with high returns that just need to be funded. That's all.
Yeah, correct. Andy is asking, I think everyone should be realistic. These are unique times and everyone should be appreciated the efforts you guys are making to weather the storm. Great, exactly. Didi, I think this is Dimitri saying, if we shouldn't, the figures on the dashboard of UG, maybe Bill, this is for you, towards €4 end of 2020, should they be adapted or shouldn't they have been adapted?
No, they should be changed. I mean, it's clearly nothing's going to happen in 2020. I mean, we can't even fly A to B at the moment. So going to do business meetings and getting funds to acquire acquisitions, and even contemplating putting something on a stock exchange, let alone a crypto exchange, would be suicidal. Let's face it. There's no time to do that. The best thing that we have with this particular asset is the management team, that it's a real asset. it's producing positive cash flows. We're increasing our ownership in that asset month after month as we pay down the note. And over a longer period, it will be delayed payment. When it starts paying, it's going to produce and give us distributions for a long time into the future when that starts. But of course, the priority right now is managing it nice and tight. I mean, be able to get this down. I don't want to keep on this particular point, but it's quite amazing. We spoke about this in Dubai. To be able to get down the lifting cost, the operational cost, what it takes to get the oil out to the market, to down $12 per barrel, when most other parts of the world, in the US, it's well over 30, etc. We're still making money at $16 a barrel. It's incredible. And why is that the case? Again, because it's the management team. They've got a huge skin in the game. It's their bread and butter. So there's some wells that were shut down because they're too expensive to actually operate. Now, as the oil price goes up, they'll actually start reopening those, and I'm not using the right terminology there, Ryan, but you start pumping, you start turning them back on again, and we'll start increasing the particular revenues again. So it's managing it. You've got a very experienced team there, two very experienced guys, plus the board that have been in this game a long time. And as I said, I first flew to Baton Rouge, Louisiana in 2004, met Ryan Messer, and I invested a significant amount with this particular group, and I've been involved with them ever since. And you know, cycles are like this. Sometimes you get beaten around, and unfortunately, the times we get beaten is probably the time we do need to have the cash in the hand. But in the long term, it all works out very, very, very well. We just have to understand the big picture and understand what we really have in our hands here. It's really a fantastic asset.
Great. I have a few more questions, Bill. Another one here from Shazad. Well, it's actually not a question. It's actually just a statement. Any sensible investor will jump at a chance to stop his share from diluting and increase shareholding. STORH's decision is correct. Great. Another one from Stephen here. Hi, Bill, Ryan. As Napoleon Hill said, in times of disappointment, the seeds of success are sown. And I have faith in both of you and the team to see this project through. Richard Brennan is asking, is there a likelihood that STORH will be available to US investors anytime soon, or are the SEC still not allowing it?
No, yeah, we're not going to be. No, I don't see an opportunity right now, and unless we become listed on a US exchange and are a registered security in the United States, there's no way we can make it available in the US, unfortunately. Sorry.
And
yeah,
brothers are here. Brothers are here, and team says we don't have to worry about the node. Team Indonesia will smash it with Sister Ani there.
You know, Zahir, I just want to say hi to Zahir and Shaquille and Sean and the team over there, of course, and Bill and everyone. They're doing great work there. What you just said, Zahir, is absolutely true. There's two ways. I mean, we are financiers of this particular project. At the moment, the majority shareholder, in one sense, of this great asset is actually the bank, and that's what's taking our revenues. So by going out and sharing this with other members, one is you're making commission. Most importantly, we're actually funding this, paying down the note quicker. And as soon as we do that, bingo, we're all getting our distributions. Now, I've got to drop a word for the business model that we have. If you're signing up in our packages, get out, share it with 3 people. You've already got your money back. So the assets own you zero, unless you're, of course, one of the higher quantum investor packages. It's a bit different, of course, but of course your returns are higher there anyways. You're getting more STORH. It's relative in one sense. But the point is, for most of the people here and around the world are actually having the affiliate program packages. Just the from 99 to 3,500. Fantastic packages. Introduce it to 3 people. There's zero risk. And when you get it, and when you start getting a paid return on your particular asset, you have an outstanding return. Now, even the asset return in the last 2018, 2019, it was a 20% return. And I think in the last year, it's been around 20% too, correct, Ryan, in that sort of vicinity?
Ryan, you're muted. You're muted. Sorry, you were talking to yourself.
No, that was my fault. Yeah, no, give or take, it's year over year, it's been around 20% internal rate of return. You know, even, I mean, typically, like I said, these fields decline over time, but you know, we were able to generate more than 20% since we bought it. That's about how much debt we paid down. It's about 20% of the acquisition price. So, and we'll continue to see that. I mean, I think, you know, I don't see the price of oil going to $50 by the end of the year, but I think we're going to see it this next year. And so let's give it a little bit of time, and I think we'll see some great revenues out of this field.
Great. Another, this is also a statement here from Bill. Always still saw long term. No one saw COVID coming. Absolutely. Another one coming here. How does the calculator work on the website, Ryan?
So we put a very just generic calculator on the website, and it just allows you to put in what you've invested, estimate what that return would be, and that assumes that it's obviously compounded as well. So it gives you the ability to do that. So that's the point of the calculator. Some people had asked for it, and so we just thought we would put it on there as we redid our STORH website.
Great. Then I have, of course, more questions as always. I think this is a great business model. Bill is saying that, and this before we turn on the other revenue streams, real generational wealth. Okay. Another one is about how much money is still left to be paid down.
Do you want me to go over that? Yeah, it's around 1.916 million. So 1.9 million roughly is the note right now.
Okay, this was from Kiev. Then, so there's a lot of questions. I'm not going to be able to do all of them. I'm sorry for that. So there's something about the purchasing domain names from Paul. I think this has to be handled not on this webinar, because it's not with, yeah. Robbie is asking, is there any idea when distributions could be done and paid? So is it after the note when basically is paid off? Yes.
Exactly. And I mean, we're making some big strides. I may have some news to release here within the next few weeks, but anyway, I don't think I want to give any sort of idea of expectation of timing right now until it actually happens.
Yeah.
But know that we're busting our humps to get it done. So.
Yeah, so Paul, regarding your many questions you have here regarding the product names and the website and the domain and so on, I mean, it's best you just send an email to support and they can arrange with you a call on that with the marketing team there, because this is really marketing issues, not really STORH so much related in that sense, okay? Because we have more questions coming on board here, otherwise I'm never gonna get through. Okay, so the note you just spoke about, Kitty was asking, that is actually in US dollar terms, yes?
Correct, that's US dollars.
Okay, and so let's, regarding the plastic recycling plant, the timetable, the cost, what it costs, you're gonna go over another webinar, I guess.
I think it's better to do in another webinar.
Okay. So, I mean, most of them, they are the same here, questions. Yes, there's one question coming from Tony. Would you be prepared to notify your investors when something like this occurs again? So you take out such loans? I mean, I think we have in the last communication 1 year ago.
Yeah, sure. Yeah, we talked about the financial partner very, very early on. And I think actually in one of our first announcements.
Yeah, but it gets missed, of course, we understand. So people missing that, and unfortunately, lots of emails. It's just crazy what Google is right now doing, like this almost always in spam. So you got to really whitelist Utopian Global. It is just crazy what's happening. And Shaquille is saying here, we have full faith in the wonderful, what is the no? Wonderful team we have, real assets, real income for years to come. Well done. So. Okay, so Sahir is going to he's also again appreciated of it. Yeah, basically those are most of the questions. The others we're going to answer. We're going to have group calls with those, especially of course with the UK team, so we can go into all those details. Just don't have the time here, but yeah, that's it. I think for this webinar, we are on the hour.
Well, thank you so much, Claudia. Thank you so much, Ryan. And again, most importantly, thanks to everyone out there for your faith and your trust. Yeah, it's been 2020. We never thought it's turned out the way it was, but so blessings to you. So stay safe and well, and we'll ensure that we manage this correctly for you as it's been done by Ryan and the team. So again, thank you, Ryan, and thank you, the board there as well.
Thanks.
Thank you all. Thanks for having me.
Jason, Tony are saying, Ryan, Bill, Claudia, thank you for your honesty as well. Absolutely transparent. That is the way to go forward. We didn't want COVID. COVID was there. COVID came, but I think you managed the asset quite well based on everything. So thank you so much. Have all a blessed evening. There's going to be an update sent out also in different languages, just that you guys know, probably in the early hours in the morning. So because we have people, of course, on the call which are Spanish, which are French, and so this is going to be done as well. Thank you, Robbie. Thank you, Sahir. Thank you, Andy, as well. Everybody who's sending in the comments, and of course, everybody who's on the call. We have a lot of viewers on the call. Thank you, guys, and have a great evening.
Thank you.